Nitin Rakesh at this point. Nitin, a very good afternoon to you. Nitin's, of course, the CEO at Motilal Oswal Asset Management. Just to start off with, Nitin, now we're nearing a new all-time high at this point of time, a possible high. Do you think it's possible, how soon do you really think we're going to hit it, really? That's the question.
So I think on the markets over the last few weeks, the markets have digested a whole host of news, primarily the second quarter earning updates, on the global macro front, the whole QE2 announcement. So I think at this point, obviously they are flirting with the previous highs, and on a closing basis they went close to being on new highs. So from our point of view, I think clearly the markets have shown a lot of strength. The earnings momentum has been fairly positive and strong. There is clearly the tailwind of consumption that is driving the economic growth. And even from a valuation perspective, we are nowhere near where we were when the markets were at the same levels 2.5 years ago. So I think we are fairly comfortable. At this point in time, the focus has to be much more stock specific to look for those sectors and companies that are relatively undervalued or where there is a contra play, and continue to stay invested in the markets.
Nitin, what did you make of Q2 in terms of earnings coming through? Was it satisfactory, above expectations? How did you find it?
I think this has been a fairly good quarter. Clearly, the momentum, more so both on the top line as well as on the bottom line, has been really good. Some sectors obviously have stood out a lot more than the others. So banking has been a clear winner. Primarily based on the operating performance, on the top line, and the fact that most banks have delivered very, very strong growth as well as profitability in terms of their net interest margins. Even from a consumption point of view, I think this has been a fairly satisfactory set of numbers. IT has done really well as well in terms of riding the global recovery in discretionary IT spending. Obviously, there are other sectors like cement where along expected lines, the turnaround hasn't happened yet, but I think people are anticipating, this probably the fact that worst is behind us. So I think at broad level, earnings growth has kept pace with market expectations, and hence we haven't really seen any negative surprises from a market point of view.
Let's talk about banking and also auto in a little bit more detail. Considering they've seen quite a good run of late, what's your view on those spaces now?
Again, I think if you look at it from the banking point of view, clearly a lot of the top line banks are no longer, cheap from a valuation point of view. But again, even if you look at the most expensive banks, there is opportunity to get 15-20% returns, because that's the kind of expectation from a top line and bottom line growth perspective. Clearly, even within the banking sector, I think the PSU banks offer a greater opportunity, purely from the point of view of valuation and momentum in terms of their earnings and expansion of those margins. So, without necessarily looking at the overall sector as such, I think it's clearly a sector that still has opportunity. Obviously, you need to find the right plays from a valuation and a momentum point of view from an earnings perspective. On autos, again, I think, while two-wheelers have run up the most over the last, I would say 12 to 18 months, I think there are still opportunities within the commercial vehicle segment or the utility segment, or even the agricultural, farm equipment segment, where there are opportunities from a valuation perspective. And in fact, autos as a segment are still not that much, way above, the overall market valuation. In fact, some of the leading commercial vehicle or utility plays are actually much lower than market valuations as well. So I think it's much more a stock-specific view. These are clearly sectors that are being led by consumption demand, and our view is that one must have exposure to these.
It's an interesting thought. You do seem to like autos even at current levels. But beyond autos and banks, Nitin, what kind of sectoral bets are you taking right now? What looks good for the next couple of months?
Again, I think if you really put in a screen of where the relative value lies, I think again select banking, real estate to some extent. Maybe the bigger names are more contra plays. Even capital goods, and infra stocks that haven't really performed at all. These are more contrarian or relative value plays. But also at the same time, I think one must have, continue to ride the boom of consumption and savings, which is what the banking, auto, and discretionary, consumer discretionary is giving you.
Right. Jill, may just get in your comments on Coal India, Nitin, current levels, and also Power Grid FPO. How are you viewing them?
Again, I think Coal India, there was a lot left on the table from the point of view of the way the issue was priced, which obviously has meant that it has resulted in very handsome gains on listing. And I think the market needed something like that because it's important for us to bring the larger population of investors back into the capital markets. So I think this is one big trigger that will, at some level, give investors a lot of hope and faith that yes, there is potential to make returns in the markets. In terms of where the price is, I think it's closer to fair value right now. But from a longer term perspective, it's a top 5 company by market cap. It's something that one must continue to evaluate to hold in the portfolio. May not give you the same kind of returns that you saw on the listing day, but I think it's clearly a longer term play and a bet on the commodity that it represents. On Power Grid, again, I think the issue has been priced very attractively, especially for retail investors. It's a very, very good opportunity to get 15 to 20% returns, given the fact that one, the issue is priced at a discount, and two, they get an additional 5% discount to the issue price. So I think it's a fairly attractively priced issue, and I think it should again carry on the good work that was done with the Coal India IPO. And I think the government's actually been fairly accurate in making sure that it leaves a certain amount of returns on the table rather than pricing the issues to perfection. So I think both of these issues will go a long way in bringing the confidence of the retail investors back into the market.